a big move in terms of metal stocks, and all of them were buzzing in trade. Base metal prices as well did see a bit of a leg up. To help us analyze how do you approach the metal space, we're joined by Mr. Rakesh Arora. Hi Rakesh, good morning and always good to see you in. Well, yesterday some mild positive Chinese data. Well, they set these stocks on fire. First, what is your preference between the non-ferrous as well as the ferrous names at this juncture?
So, Nigel, I think, market is going ahead of itself. Meaning there was a little bit of positive data coming from China. And maybe, commodity prices have kind of bottomed out and there might be some uptick, given that we're expecting, US interest rates to be cut and maybe US dollar index might, weaken a little bit. So there are positive cues for, commodity prices to go up. But, metal stocks are kind of building in a much better scenario already. So there's a mismatch between reality and the stock prices at the moment.
So what would your preference be then if, there is a bit of a mismatch, though prices could have bottomed out?
That's correct. Prices could have bottomed out, but, stock prices have already run well ahead of themselves. Meaning there is a case for, Indian steel companies' margins might have bottomed out because, steel prices have been falling quite sharply in China. But now there's support coming in from coking coal and iron ore prices going down. So steel prices may not really move up much globally, but margins might improve from here on. And that is a little bit of support coming for steel companies. But when I look at their valuations trading at anywhere between 2 to 2.5 times price to book, that leaves hardly anything on the table. If you look at sustainable ROEs for these companies, they're hardly around 14-15%. So I don't think a re-rating from here on is possible. Just the drivers is going to be volume growth, which India is seeing plenty at the moment.
All right, since you spoke about that valuation argument, Rakesh, JSPL is normally the one that trades at a discount in comparison to its peer set. But now they've taken various measures on ground, to focus on the cost side. Also, that political uncertainty with regard to the promoter entity, which is Mr. Naveen Jindal, that could be, on the back burner for now because he's going to be contesting elections. And also, he's joined the ruling BJP. So that could set some bit of that uncertainty aside. What's your view on the stock from here on?
So, Nigel, I think the stock has already reacted to this positive development. And going forward, JSPL has a large capex coming on stream in FY25. So that should really help, its earnings growth. But having said that, as I was mentioning, that re-rating from current levels for not just JSPL, but most of the other metal stocks seems difficult to me. We have to look individually, which companies are coming out with, with what kind of capacity expansions and cost-saving measures. So there could be a little bit of, divergence in performances because of individual companies, operating changes. But otherwise, as a SPAC, surprisingly, I was looking at the shareholding data. Mutual funds have been increasing stake in these metal companies in the last 2 to 3 quarters, whereas retail has been selling. So I'm just wondering who's the smarter one out here.
Rakesh, good morning. Just to kind of pull back once again. So let's just assume that we finally see some very strong sort of China measures in China, right? So we get a full reboot. That's one. Second, there is the promise of rate cuts and lower dollar, etc., into FY25. And sometimes the promise of something is more desirable than when it actually happens. Right. So in the meanwhile, growth is strong and, the rate cuts are coming. So it's a very Goldilocks, nice kind of situation. You don't think commodity prices in this kind of a situation will be sort of well supported? And of course, what happens to stocks is you say maybe a lot of it is built in, but just wanted your thoughts there.
So Prashant, I don't think the probability of Goldilocks is very high. First of all, I think 2024 is more likely to be, similar to 2023 with slightly positive, support for the economy. So neither I see, China's stimulus being, out of proportion. And secondly, China is no more the same as what it was, say, a decade ago. The capital efficiency in China is decreasing quite a bit. So even though the stimulus amount is same, it's not really translating into the same push to commodity demand. Number two is that overnight we saw what kind of data is coming out of the US. So probably rate cuts are going to happen, but it may not be. It will be a shallow rate cut cycle that we're expecting. So in this kind of scenario, it's more of a consolidation rather than a big bang recovery in commodity prices. So I'm not really in that camp. I think that we will see marginal recovery, and once market is able to come to terms with that in terms of earnings growth, maybe these stocks will see time correction at least.
All right. A final question, Rakesh, before we let you go. What about Hindustan Copper? Fundamentals, if I look at the company's fundamentals, then, you can't justify the stock at 300 rupees. But just going by the shortage that we're seeing globally, the copper prices, the street continues to bid the stock up. Now it's more than 300 rupees. What's your view on Hindustan Copper?
So Nigel, like all other, illiquid PSU companies, these, stocks have gone to an unreasonable valuation. I don't think, investors should really waste time on these kind of, stocks.
And what about Nalco? What about Nalco, Rakesh?
Nigel, Nalco has, a few triggers coming up. They have, captive coal mine starting, so their cost of production might actually go down. And not to say that the valuations of Nalco are very cheap, but at least they have, it's better than Hindustan Copper, I would say that.
Okay, all right, Rakesh, we leave it at that. Thanks a lot for joining in. That's a deep dive into the metal sector, but let's get back